So I thank the KGMOA for this invitation. I also thank all the executive committee, the academic cell for this session. So in the next 20 to 25 minutes, I will discuss about what are the investment options for any person. Because us doctors, we are all concerned about salary hike. We are all concerned about our arrears, DA hike, then all these benefits. But we are very poor, including me. We are not concerned about how to build a corpus, number one, how to multiply our money. We are not concerned about that. So I will discuss the important issues in next 20 minutes. So we should all have a basic financial planning because we all have... Yes, ഞാൻ ഒരു കാര്യം ചെയ്യാം. ഞാൻ എൻ്റെ വീഡിയോ ഞാൻ ഓഫ് ചെയ്യും. ഓക്കെ, ഇപ്പൊ ക്ലിയർ ആണോ? ഇപ്പൊ കേൾക്കാമോ? Yes. We all should have an emergency fund. Emergency fund means if anything goes wrong, we all have a service, we all have commuted leaves, earned leave, etc. But if anything goes wrong, then we should take care of our EMI, everything. So we should have an emergency fund. So emergency fund, which should take care of our 3 to 6 months need. If anything goes wrong, then there is for emergency fund. You can put that in an FD in a bank. We all should have an emergency fund. That's the first and foremost thing, lesson for a basic financial planning. Number two, all we are covered by the insurance from the government, but for all the family members and the parents, all the dependent parents, if it is not covered, then we should have a medical insurance. This is a basic step. Next step is that we all believe that, and whenever a person when we discuss with many people, with friends, classmates, colleagues, etc., they all say that, okay, I have so many LIC policies, that's how I invest. We should understand that all the LIC policies are not investment. These are all insurance policies. The full form of a LIC is called the Life Insurance Corporation of India, and it is not Life Investment Corporation of India. So any policy you buy from LIC, or for that matter from any insurance company, it is an insurance and it is not an investment. That's the investment and insurance. They are separate compartment, and we should not mix insurance and investment together. Then the only insurance we should have is a term insurance. If you die, definitely then the family should have an adequate financial support for the education of your children, for their future. So we should have a term insurance. So apart from term insurance, it is not advisable to have any other insurance policy. The other important thing we should always think, especially people who are completing their MT and DM, they all have a tendency to buy big things like a BMW, the new cars, Mercedes-Benz, and they are finding it very difficult to pay off that. That's one of the trends which I see when I interact with many people. We should restrict our EMI, either a home loan or a car loan, whatever be the loan. It should be a maximum 40% of your salary. If your EMI or loan exceeds 50%, 40% of your salary, it's not a healthy thing. We should restrict our EMI to a 40% of our salary. These are the basic things we need to have in any financial planning. The next thing is the biggest enemy in India is inflation. So if you look into the inflation in India is, as of now, it's around 3.6% in February in 2025. Based on the inflation and economic trends in India, data was published by the Press Information Bureau, PIB of Delhi. And the most important thing we need to understand is that the inflation in Kerala is very high compared to other sites in other states in Kerala, states in India. So rural inflation in Kerala is 8% and urban inflation is 4.5%. This is one of the highest in the country. And overall inflation in Kerala is 7.3%. So we should have an investment strategy to beat this 7% inflation. If we are not able to beat the inflation, definitely we are eventually losing our purchasing power. That's the most important thing when you invest. What are the investment options we have? Okay, if you have investment options, a lot of investment options are there. You have the savings bank. Okay, traditionally, or 50 years back, our parents used to tell, if you have money, you buy land. Okay, if you have money, you buy land. If you buy money, then you buy gold. These are two things which we have been traditionally using, especially people from Kerala are using this. But whether they are the real investment options, you have from array of options are there, starting from savings bank. If you give savings bank, it will give you 4% returns. Liquid funds, then you have the small savings like the Provident Fund, National Savings Certificate, post office deposits, RBI bonds. Then you have the debt funds, you have the gold, you have real estate, you have equity, you have crypto. You have empty number of options are there. But if you climb the ladder, there is more risk is for equity compared to your FD assets, but they are likely to give you more returns. That's in long term. So if you look into the interest rates in savings scheme, we have seen the inflation in Kerala is 7.3%. And if you look at it, none of them, see only the Sukanya Samriddhi account and the senior citizen schemes. These are the two things which beat the inflation of more than 7.3%. So all others, like say, take the 5-year recurring deposit. If you have the national savings certificate, it more or less doesn't meet actually the inflation. Same is for the PPF. It is 7.1%. And we are going to see a rate cut in India in the future. The interest is going to come down in the future, in the coming years. And all this, the small savings scheme interests are also going to come down. So I will compare it. This is a data comparing FD basis gold basis equity. If you look into the 20 years, like from 2001 to 2021, if you have invested, say, invested in 1 lakh, invested in 2001, and after 20 years, if you look the equity, it is around 16 lakhs. And if it is the FD, it is around, say, 4 lakhs. And if you look invested in gold, it might have been 10 lakh rupees. Okay. So in equity has performed better. Equity means investing in mutual fund stocks have performed better compared to either a FD or gold. Okay. For gold, it always give a reserve. Okay. Recently we can see that many of the central banks are buying gold, including India. So that's why the gold price is coming up. It doesn't mean that it is a good investment option for a long period. We all need to know another concept that is called. So first concept we need to learn is one, inflation. Second thing is you need to know rule of 72. Rule of 72 means if you have put money in the savings account, 4% returns, it will take, if you put 1 lakh rupees, and if you keep it idle, and it will take 18 years to become 2 lakh rupees. Means it will take 18 lakhs to double the money. If you invest in, say, a mutual fund, which is likely to give you 12% returns, your money will double in 6 years. And we need to learn this new art to double our money at least once in 5 years. It is only by investing in mutual funds or stocks like 15%. If you invest, say, 1 lakh rupees, if your vehicle is likely to give you 15% returns, then it is likely to double in 4.8 years. At least we should learn this art. Okay, this is a norm now, and everyone have started investing in equity because we are forced to start the new norms. Why? Because the gold, the real estate, the small savings all have its own pitfalls, and we should have a vehicle which is likely to give you returns which likely to beat inflation. So few of you have responded to the Google sheet shared by Dr. Praveen. One of the most questions which I got was how to start an SIP and what is SIP all about. SIP is like you put a money, it is like an RD, it is like a recurring deposit. Like you put a particular amount of money in a mutual fund or a stock at a particular specified date, like on 5th of every month, 10th of every month, 15th of every month, you are giving permission for a mutual fund house to deduct a 5,000, 10,000, whatever be the amount from your account, So everything is ESIP, means ISIP, Internet SIP. You don't have to give checks every time. So it will be automatically deducted from your account. So it is a simple way of investing in equity in stock markets, or either you can do it in a mutual fund. Mutual fund means it's a bunch of stocks. Like a mutual fund is likely to have a 20, sometimes it will be 30, it will have 40 stocks, and they will invest. The fund manager will allocate your money. Suppose if you invest 10,000 rupees every month in a particular mutual fund, say for example, if it is investing in a stock like Bajaj Finance, say 1,000 rupees will go to Bajaj Finance. It will make, depending on the proportion, weightage in the portfolio, or 500 rupees. And you invest in other companies like that. Okay. The advantage is that it is regular, disciplined way of investing in a mutual fund or a stock. It is very similar to an RD. Another thing is that it is professionally managed, and your fund manager will take care of your investments. So you don't have to take care of you have to reallocation or switching or your portfolio. You don't have to do that by yourself. It will be taken care of by your fund manager. It is very simple. Even if you can start with 100 rupees per month nowadays, it acts like a good EMI for a long term, and it is one of the simple ways of creating long-term wealth. And there is no need to time the market. Now the market was down, it is picking up. So there is no need to time the market if you are investing in a mutual. It is investing if you are doing a systematic investment plan. Systematic investment plan is also called the smart investor's preference. The biggest one of the eighth wonder of the world is called the compounding. The power of the compounding means if you invest, say, I will give an example. If you invest in a mutual fund, say for your children, so a son or a daughter, say 2,000 rupees in a mutual fund for the next 30 years. Okay, suppose if the child is, say, 1 year old, so you invest for 30 years, just 2,000 rupees in his or her name. And the total amount of investment in that period will be 7,20,000 rupees. Okay. And if you invest in a mutual fund, which is likely to give you returns of 15%, after 30 years, it will be compounded to 1.41 crore. That is the power of compounding. And this is the eighth wonder of the world. How to start a SIP in mutual fund? That is one of the question is most sought after. How to start an SIP? It can be done either you go to the mutual fund website, or you can do the apps like the direct mutual fund apps by it's a free like Grow, ET Money. You can have Zerodha, Paytm Money. You have a lot of options are there. And then you start an account in the Demat account in any of them. Then you invest directly in mutual fund. Your mutual fund investment doesn't need a Demat. Demat means it is for holding stocks. You need an account. That's called the Demat account. So even without a Demat account, you can invest in a mutual fund. That is by investing in any of the mutual fund website directly. If you're interested, then you can go through this websites. This will give you a very clear idea about how to select a mutual fund and how should be the proportion, because it is beyond this lecture. Actually, I can take it as a question, but if I start explaining all things, it will take another 20-30 minutes. So I'm not going into that. This are the websites which will help you to understand that. This is my simple this one. If you should restrict the mutual funds to say 4 or 5. You don't have to have 12 mutual funds, 15 mutual funds. Then I every time I get a WhatsApp message, give me 10 mutual funds. No need for that. So if you invest in 10 mutual funds, it will be an over diversification. You have to track all the mutual funds. So you will not have much time. So you restrict the number of mutual funds. And moreover, if you invest in a mutual fund in different houses, and you all have to pay for that. You don't have to do so you limit number of mutual funds. You can have a flexi cap fund, which is most suitable for as of now because of the wide variation in the market now. So I suggest Quant flexi cap fund or HDFC mutual fund, HDFC flexi cap fund. The proportion is based on the risk appetite. This is different for a different person. So how much you can tolerate chilli? Okay, that's different for different person. In the same way, the tolerance, risk appetite, everything is different for a different person. One menu may not be suitable for another person. So it has to be person individualized, and it is a tailor-made. I have a few suggestions in 2025. One, you have to do a reverse SIP. Reverse SIP means you have a goal. So always as a doctor, I suggest you to have a goal of 1 crore rupees. Very simple. If you invest in a mutual fund, 15 years in a mutual fund, which is likely to give you 15%, in the next 15 years, it will reach 1 crore. Very simple. 15, 15, 15. You will reach 1 crore. Very simple. We all can achieve this goal of 1 crore in next 15 years. If we invest very simple 15% in a mutual fund, which is likely to give you 15% every month, 15,000 rupees. So that is reverse SIP. Step up SIP means you increase the SIP amount every year, like say 10%. You are getting a salary hike, like you have a increment, annual increment. So you cheat yourself and you invest that money in a mutual fund. That is called step up SIP. And always do a direct investment, means between you and the mutual fund house. And never bring a broker, because broker will eat a lot of money. Okay, so I will give you an example. So first I will take the reverse SIP, means if you invest, say you expected 1 crore. Every doctor should have a goal of having a 1 crore, say in the next 15 years. It is an actual target. Okay, 1 crore, 15,000 rupees, 15% returns. You invest 14,077, 14,700. So if you invest that, you will reach 1 crore in 15 years. Very simple. And if you want to invest, say, if you can invest, say 35,000, and if you have a goal of 1 crore, and you have only time horizon of say 10 years. So many people have only 10 years of, or you want to achieve that 1 crore in say 10 years, it is also an achievable target. So you can become you can have a 1 crore in next 10 years. If you invest say 35,000 rupees, that's 36,000 rupees in a mutual fund, which is likely to give you 15% returns, then you will reach the goal of 1 crore. And you have say 25 years. So I have just joined the service. So many of you, maybe in your late 20s or early 30s or mid 30s, you have another 25 years of active professional life. I suggest you to dream bigger, like you want to have 10 crore rupees. If you invest in 25 years in a mutual fund, which is likely to give you 15% returns, 30,000 rupees every month, you will reach 1 crore in 25 years. It is also an achievable target. So that is important thing for youngsters. Second step I said was you increase your investment by 10% every year. So I said 15, 15, 15, you will reach 1 crore. Very simple, 15, 15, 15. But if you step up 10% every year, then you will reach, this is 1 crore, but the corpus after say 15-year period will be 1.66 crore. Means if you increase your annual SIP by say a monthly SIP by 10%. So suppose if you are investing 10,000 rupees this year, every month, and next year you increase by 10%, that means 11,000 every month. And then you increase, the next year you increase another 10%. If you can do that, you will reach that destination higher, 1 crore very early, and also you will have a very high corpus compared to a person who didn't do a step up every year. And third important factor is a direct versus regular mutual fund. Many times I get queries regarding whether I should invest with a broker or directly. My simple answer is that you do a direct investment, avoid a broker. I will give you an example. So suppose if you retire, say you are going to retire, I don't know the retirement corpus you get at the time of retirement. So let it be say 50 lakh rupees. So it will be more than that for many of you. But I'm arbitrarily saying it is 53 lakh rupees. So if you invest, say at the age of, say, I don't know the KGMOA, say let it be at the age of, so you retire from your professional life, say at the age of 65 years. Okay. So you invest say around 50 lakh rupees in a mutual fund as a one-time investment. If you invest in for 20 years, 20 years means there is no period because you can redeem at any time you want. There is no fixed time period for investment in a mutual fund like a ULIP or insurance policy. So you want to do that for 20 years, investment for 20 years. So by the time you become say 85 or you invest at 60 years and you become 80 years. So if you invest in, see this is 53 lakhs. So if you invest in direct This will be 6 crore 71 lakhs. And if you invested in direct stock, it is 8 lakh 67, means it is around a 2 crore difference. And this has been taken by the broker. And they will call you different times. They will say, sir, many times, madam, many times. They will eat a lot of money. Okay, they will take a lot of money, means 2 crore rupees in, and the extra returns is around 30%. So always you do a direct investment than a regular mutual fund. Regular means it is through the broker. I will give you another example, like say if you invest in say 50,000 rupees, like say 15% returns for 20 years, then the direct investment will be say like 1 crore 99 lakhs, and the regular it will be 1.66. So it is difference is 32 lakh rupees and the returns is 20%. It means you have to always invest direct compared to a regular investment. Now, to go for a mutual fund or a stock, you can also do SIP in stock. You first start with a hatchback sedan, then you take for a truck or a bus. That's my simple explanation. If you know how to take care of that, then you take the big boys like bus, truck. So you should be well versed in that. Then you can invest in direct stocks. I've stopped investing in mutual funds now. I'm investing only in stocks, that too by an SIP route. See, if positive things and negative things are there, you have to track your stocks directly, never based on any tip or based on a news channel anchor or based on some Economic Times article. You should never invest. You should invest based on your conviction. You should do a fundamental analysis of the company. You are doing business with that company. So you should know what they are, what is their governance, corporate governance, what is their motives. A lot of things are there you have to take when you do a direct investment, but it is going to give you good returns compared to a mutual fund, and it is also less means the cost is also less if you invest directly in stocks compared to a mutual fund. The advantage of a stock investment is that I have the stock selection. I will give you an example. I don't drink or I do not use alcohol. I don't alcohol or cigarette. Okay, so I'm against because I am seeing the ill effects of that. I discourage that, and I do not use and I do not encourage any of this. So I do not buy ethical principles. I do not invest in stocks, alcoholic stocks, although they are giving very good returns. But if I invest in a mutual fund, I don't have a choice because it is decided by the fund manager. But if you invest in direct stocks, then you can select the stocks. And another important thing you need to understand, if you want to tax save, okay, and tax saving is not there. If you look by you have the old tax regime and new tax regime is there. If you follow the new tax regime, it is immaterial because it is not, the ETC is not considered. But if you want to stick on to the old regime, I don't advocate that. But if you have a home loan, you stick on to the old regime. But even if you invest in a tax saving mutual funds, direct saving, it is called the equity linked saving schemes, then you can save a tax saving if you invest in a mutual fund. Okay. And so this is between the mutual fund and stocks. Okay. Only after proper research. Okay. And what you should do with the money which you are generating over a period. Okay. You should do a systematic withdrawal plan. You all have either a pension or you have an NPS, but if you want to, you have monthly money, then you should do a systematic withdrawal plan. Like systematic withdrawal plan, you generate the money and transfer to a mutual fund. Then you ask for a systematic withdrawal plan, like the reverse of the mutual fund. Suppose if you I will give you an example. Say corpus is 1 crore rupees. You withdraw 1 lakh rupees every month in a mutual fund, which is again growing. And say at the age of 60, you start. Then after 90, the corpus will be very high. This will be the corpus. You read that. It will be 10 crores. And this you can pass to the next generation for your children or grandchildren. You can do that. So best way to utilize the money which you acquire over a period of time, you transfer that money to a mutual fund, then you ask for a systematic withdrawal plan. So that's the best way to do that. Then the rest of the money will be utilized by the next generation. And if you're interested to select a good stock and how to invest in a stock, we can have another session that's beyond this discussion. So either you can go through any of these websites, they are all very good. Okay. And so I'm coming to the last two slides of this last two slides. So most important thing is that never leave the money idle in SB account. When I discuss with doctors, they have 50 lakh rupees, 1 crore, 10 crore, a lot of money in their savings account, and it is not useful for you, your family, the bank, or for the nation. It's not useful for any one of you. And you should make your money work when you sleep. Then you invest in some good vehicles. Then you will have a reasonable amount of growth. Always we should have a medical insurance if it's not properly covered. We should have an emergency fund. This is the only debt I do in my practice, because in my life, I never invest in gold or real estate because a lot of liquidity issues are there. I do not consider them as good investment strategies as of now. Never consider insurance policy, and always ask a question. ULIPs, okay, that is one of the questions I ask. I get ULIP, Unit Linked Insurance Policy. My personal view is that insurance and investment, they are different compartments. So you should not mix these two, and you invest properly, and insurance is a different game altogether. And maximum investment in equity and goal-oriented investment is very important. Always, I personally feel that all doctors should have an SIP after this talk. And always you top up your SIP, do a direct investment, limit number of mutual funds, understand the tax implications. Okay, it is the long-term capital gains is now over if the profit is more than 1.25 lakh every year, then you have to give 12.5% as tax. If you're interested, I can work on that. Then avoid sectoral funds, like never invest in the power sector funds or energy themes. Always you diversify and check only. If you invest in a mutual fund, never check every month or this one. Always check once a year, because there will market fluctuations. All this investment in a mutual fund or stock is only for long term, or not. There is no Manchium effect in stock. If you invest, say, if you say that give me 5 lakh rupees, I will double you in 10, I will double you in 3 months, 6 months. It is like a Manchium. Okay, never invest, never go after that. There is nothing there. Okay, it is the patience is rewarded. Okay, the conviction will be rewarded. So you need a lot of patience, and this will not be multiplied overnight. And always you should have a start. My simple suggestion is that you start with investing in mutual fund, slowly read this, then you will get a feel about that, you will feel good, then you slowly change to invest in stocks. Okay, and for a monthly return, then the SWP is the best way. Thank you very much for your patient listening. I'll be happy to take your questions. Yes.
Thank you, Cecil. Yeah. Questions? Anyone of you can unmute and ask questions.
Or you can type that. Okay, I will also take it back.
Yes. Questions, chat. How can I choose a KIC policy, LIC policy?
LIC policy. Okay, I'm not. How can I choose how can I close LIC policy? Close LIC policy.
Choice. Close an LIC policy. Yes.
Okay. Yes. Close an LIC when I was an assistant professor in 2008, 2009, then I realized that the best way to invest is to invest in a mutual fund. Okay, I started investing in direct stocks later, after a decade. Then first thing I did was I had a post-life insurance policy, PLI. Okay, I went to the Postmaster General Trivandrum. Okay. Then at that time, I was maybe 35. Now I'm 50, going to be 51 very soon. So at that time, then the Postmaster General, I was fortunate to see the Postmaster General because the clerk took me the Postmaster General. This 35-year-old guy wants to surrender PLI policy. So the PLI policy, then I realized that this is a hindrance because I'm giving, I was putting say around 5,000, 3,500, 4,000 rupees every month in that PLI. So they closed the policy. I lost money. Then I started investing in mutual funds. It has given a lot of returns in the future, eventually. So always you have to, all these policies, to be very frank with you, is likely to give you 6 to 7% returns. Okay, it will not beat the inflation. Okay, these are all tax-free, that I agree, but I'm totally against investing in life insurance policies. Investing in other thing is how there's one next question was that what is a flexi cap fund? Flexi cap fund is the flexi cap fund. So when there is a market fluctuation or the turbulence is there, the fund manager has the flexibility of shifting, rotating the money from large cap to mid cap to small cap companies. So that is the discretion of the fund manager. So there are mutual funds like large cap, means 65% of the money should be invested in large cap companies, like blue chip companies, like the top 100 companies in India. But if it is a mid cap fund, it is like say 100 to 250 companies. So it means 150 companies apart the 100. So it means 65% should be there. But a flexi cap fund means the fund manager has the discretion of investing and rotating the money among the various companies. So that gives you a lot of liberty for the fund manager. My suggestions for two flexi cap funds, one is HDFC flexi cap fund and other is the Quant flexi cap fund. So these are the two recommendations from my side. Then I will take the next question.
Please suggest some good books on investing.
Yeah. So this is if you just Google that. Okay. So if you look into the okay, I can give you, if you look into the one of the good books I feel is that there's a book called The Coffee Can Investing by Saurav Mukherjee. That's very good. The other book is The Diamonds in the Dust. That's also then The Psychology of Money, The Rich Dad Poor Dad, Investment, Intelligent Investing. So these are all very good books. So you just Google very good books in equity investment. All these books will pop up. Okay, so you can invest that. Then
elaborate on SWP.
Okay, SWP. SWP is nothing but the reversal of the SW. Is the reversal of the systematic investment plan. So a systematic investment means you are putting money every month. Then there will be a corpus after say period of 5 years, 10 years, 15 years. But systematic withdrawal plan is that, so if you have a lump sum of money, say I will give you an example. So you got say 50 lakh rupees by selling a land or by something else or given from your family share. But you want every month you need say 1 lakh rupees or say 1 lakh, 1.5 lakh rupees, 2 lakh rupees. Then you ask the mutual fund house to deduct. You say everything can be programmed online. Then you say that on every month of 5th of every month, I need 1 lakh rupees. And this money will be credited to your account from the mutual fund house. So that's how it works. Okay. What is ULIP? What is ULIP? ULIP is United Linked Insurance Policies. So is it good to invest in ULIP? No. Personally, I'm totally against investing in ULIPs. Most of the time, when I have very bad experience, I counsel people, please go to bank. They say that we don't know how to start a mutual fund. We don't have the computer access. So I say you just go to the bank. Then you say that I want to invest in a mutual fund and you invest in this mutual funds. I will give a prescription also. The moment they go there, so they will have some target. Okay. They will say, we will give you a product which is similar to mutual fund. Okay. Then they will make you invest in a United Linked Insurance policy. I'm totally against investing in ULIP because there is a lot of hidden charges are there. Okay. A lot of hidden charges are there. So it is not investment or it is not insurance. So I take a term insurance plus invest in equity. What about investing in bulk amount as a single time investment like FD? That's also a good suggestion. So if you are having a bulk amount, say if you are investing, say if you want to invest in 10 lakh rupees or 50 lakh rupees, 1 crore. So recently I had a discussion with one of the professors retired from the medical college service. So he wanted to invest 1 crore rupees. Then I suggested that you invest in a staggered manner rather than putting the whole thing in this. Then I also diversified that money into mutual fund, then also stocks. Then, so it depends on so many factors like how much money, when you need this money. Okay, suppose if you have 1 crore and if you want to invest, then I will ask you when you need this money. Then if the person says that I want this money in the next year, I say you put the money in FD. Then the person says that, okay, I want this money, say after 3-year period. Then I will say you invest in a hybrid fund. Hybrid fund means equity and the debt funds. then you invest in a hybrid fund. And the person says that I need the money only after say 4 year, 5 year. Then I say invest in stocks or mutual fund depending on the risk tolerance and the risk appetite. That's my personal view. Yes, I think a lot of questions are there. Topic. Sorry, Wilson.
How to invest as a SIP in stocks? Is there any difference in ICICI Direct and Zerodha for Demat account?
Okay, very good. Okay, I got that.
Baki, only 5 to 10 shares are seen in ICICI Direct during trading hours. Do they filter shares, or only so many options are actually there for retail purchasers like us?
Okay, so earlier I was a fan of like the HDFC Securities. I started investing in HDFC Securities. My personally, I'm saying that, and eventually I switched to Zerodha, and for me and my wife, and for my son, then I'm using Angel One. So what I feel is that the zero brokerage firms are better, okay, because and the platforms are really good. And number one, the platform, the brokerage firm in India now is Grow. Okay, very good, very patient, very user friendly. So I have started Zerodha years back, so I stick on to Zerodha. But if I want to have another account, I prefer is Grow. I won't go after any HDFC, Axis, SBI, or ICICI Securities, Kotak Securities now, and because a lot of the zero brokerage firms are available now. The mutual fund through the bank, it is like broker. Yes, that's a very good question. Okay, I think Jitin has already, it is like a broker. Like through bank, it is a broker. It's a bank acts as a broker. Okay, the bank will charge you some good books for, yes, Sachin has given. Yes, very good. Yes, what is ULIP? That's good. For medical insurance offered by banks.
This is good.
Okay, this I think answered. Okay, Dr. Sachin has answered. Yes, very good. Momentum alpha based index funds advantages. Okay, so if you can have the always if you look especially in mid cap and small cap funds like the mid cap fund, which I suggest is now the Motilal or small mid cap fund. Or if you want to invest in small cap funds like one small cap fund or a Nippon India small cap fund, you should have a long term horizon. Suppose if you look into the small cap index, which has come down say around 25% in the last one in this market crash from September to 2024 to this period, the small cap indices has come down. So we should have a strong conviction, and we should invest in. You should have a long-term bet. Then only you should invest in that. Yes. Percentage invest in large cap, small cap. It is purely the person goals and risk appetite, as Jitin has clearly mentioned. It is different for different person. If there is a very good risk appetite, then you can invest only in mid cap and small cap funds. So you should not invest in large cap funds, but you should have a strong conviction. You should have a long-term horizon. In bulk amount, what about they take in crypto? Yes, this is I want to ask this one. What about you take in crypto? Yes, crypto is a good. It is, I believe that the blockchain technology, that is the technology behind the crypto, like the Bitcoin, Ethereum, the blockchain technology is the next internet. Like we all interact because of the internet. The next internet is going to be the blockchain technology. And this is going to revolutionize in the future, but it is only in the nascent phase. And there are a lot of volatility in Bitcoin and Ethereum. I have invested in crypto as well. So, but that you please restrict the investment to 5 or a normal person, not beyond 5% of your entire portfolio. Should be.
Is it legal to invest in crypto
Yes,
in
yes,
India?
it is legal now. It is legal
Recently.
now. It is legal now. It is legal now. It is legal now in India. And the only concern is that for an equity stock, the tax gains are different. For crypto, it is a bland 30%. So if you make say 1 lakh, it becomes
very high tax rate.
Flat 30%. Flat 30%. Yeah. Yes. Is taxable. Is withdrawal from any investment is taxable. Yes. If I start investing in mutual funds, so Zerodha will go up. Direct, it is direct. Okay, if I use Zerodha, you use Grow or direct. I think this is he has answered it. I think any other questions?
Sir,
So
sir,
Is
sir.
the market correction over? Is it good time to start investing in stocks for long? Ah, this answered.
yes, if I have a mixed picture in that. If you look into the market crash from the September 2024, it was because of many reasons. One, there was a growth slowdown in India, number one. Number two, and because we were having a bull run from 2000 to 2024, and your valuations were stretched, the earnings visibility was not there, and the Trump factor came into picture, and then the rupee became and weak compared to the dollar, and the foreign institutional investors find that the US market became very promising. So due to a lot of factors like the growth was low, the earnings were less, and the rupee became worsened, and the dollar became stronger compared to the rupee or any other currency, and also the long-term capital gains became 12.5%. All these factors were there. Therefore, a market crash. It's a transient thing. Its Indian story is intact, and it is one of the best resilient market, and it is one of the fastest growing market in the world. And we are likely to grow at 7% GDP in the next coming years. So that's a promising thing. So don't worry about India. And many people said that all this equity market is going to crash. No. And what about whether for the last few days it is recovering? I'm not saying that it has fully recovered, but I feel that most of the worst is over, and we are in a very promising territory now. Please start investing. Please start your positions now. And always you should think that, okay, if you are investing in direct stocks, please be very careful, okay, because when you invest and there is another crash, I personally feel that when there is a rally and there will be a profit booking by all this domestic, because all the domestic investors, including all there are panic really, because they are likely to book profits when there is a rally. So that's one of the concerns I have. So if you're a long-term investor, you start your invest. Yes. If you have money, so that you will be able to make money when market goes up. Yes.
Sir, see,
Yes.
see, is bull market some kind of a birthright? It need not always be there. Sometimes
It
we
is
can have a very
always,
prolonged bear market also, right?
yeah. It can be a prolonged bear market, because if you look into the Indian bull market, even if can be a bear market, it can even we can prolong for say 12 to 18 months. So if you look in 2000 from COVID, the bearish trend lasted only for 2 to 3 months period. In 2022, again there was a phase. Then when there was a Ukraine-Russian war, but it lasted for another month. So here we are seeing another more stretched bear market from September 2024. So I feel that this will be more prolonged, and we will see a consolidation. The market will move only in sidewise. So and the next 6 months will be a good opportunity to have a good amount of investment. I have a personal suggestion that please do not buy any very high-end gadgets now, like a new car or anything. Please invest in mutual fund or stocks in the next 1 year. Then for the long term, you will get a lot of money. Right.
Sir. So
yes.
the contention is that India is the best growing market, so it will outperform all other markets, especially developed markets. See that during the 2008-9 crash, the Nifty's low was around 3,000.
Yeah.
The S&P 500 in the US, its low was 600. So it is now at 6,000, and Nifty never went to 30,000. So even with the growth rate of only 2 to 3%, their markets are if you consider the 15-year period, it has actually outperformed even India.
Yeah, I agree, because if you look into the last 14 years from 1979, the CAGR growth rate of the Bombay Stock Exchange was 15%. Okay, 14.7 or something. So actually, if we get 15%, even the index is giving you as 15% returns. So it is not a good, because I'm not saying that, okay, US is not growing, because what I feel is that eventually the growth will come from India. Okay, if you look into the US stocks, it has crashed because it is overstressed now. It is overvalued because of the inflation in the US. Okay, I feel that there will be a correction in US. It is going on. Many people say that the US is going to recession. I'm not a fan of that because there's two school of thought. But I believe that the money will come back to India. The money will come back. Money will come back to the emerging markets from US. And one of the sweet spot will be India. And the US people and the people who have withdrawn the money will be forced to invest at a higher level rather than this one. Yes. Any other questions?
Sir, how we can invest in US stock market?
Yeah, US stock market, you can invest in different ways are there. Okay, one you can do other. There are different apps are there, vested. Okay, number one, you can do vested app. Instead, you can do that. There are other mutual fund houses are also giving you US focused funds are there. So you can do that also. So you can either way, you can direct stocks or you can do that. It is better to have you wait for some more correction. If you want to invest in US stocks, please wait for some time. There will be a correction is going on. And once you stabilize, you invest in good stocks. You invest in the big giants itself. You invest in Amazon, you invest in say Microsoft, you invest in Alphabet or Google, then you invest in Meta. So that will be good. And the main concern with the US stocks are that it is mainly based on tech-based stocks. Okay. And apart from that, the stocks are not really performing. Okay. But in India, there are a lot of opportunities are there. Yes.
Yeah, I want to diversify. So
Yeah.
through which
Vested, you can
route?
do a vested.
Yeah,
can
through
do-
which route I can apply for that? Yeah.
You can use a vested. You can use that for the. Okay, I can show that. Okay.
Yeah.
Ways.
Which one? Which through which app?
So you can use in vested finance. Okay. So I will give the link in this one. Okay. I will give the link in the
Chat
inside.
Cecil.
Yeah, I will do I will give in that copy. I will do in the chat. Okay.
Sir, is it advisable to go bet entirely on equity? Anyway, there is risk, right? So
that
we
is
need some
that's
diversification, right?
that
Some
is
fixed income should be there. Those all should be there, right? The growth will
yeah,
get bogged. It will get
that
bogged down a bit, but that will bring some stability, right?
Sir, that depends on the discretion. Okay, suppose what percentage should be equity and what percentage should be FD debt, we cannot define. Okay, that depending on different person. Okay, so many people believe that okay, if you look into by the international guidelines, you say that age minus 100 minus your age should be the equity exposure. But like if you are 35, then your 65% should be in equity and 35% should be in debt. That's the international, the good old like guidelines, like the guidelines. But I do not believe in that because it depends on your risk appetite, your personal preference, like that. So my view will be slightly different. I am an equity man. Okay, apart from the emergency fund, I invest in equity. Okay, I don't invest in other things like, okay, depending on you are this one. Depending, so that is why purely personal. Okay, so everything has its own positive things and negative things. Yeah. That is that depending on so should we change the NBS funds directly in SBI pension fund, UTI, LIC pension funds? That depending on the performance. So in that, then if the performance is better, then you go for that fund house. Suggest a few free credit cards. Okay, so that is one of the important things I always suggest. Never use cash in your transactions and limit the UPI transaction also. That's also my suggestion. If you want to buy something, always use a credit card. Always use a credit card. Always use a credit card. And if you look into the SBI, previously they were using doctor's credit card was there. If you have an HDFC or ICC, then if you put a certain amount of FD, you are eligible for a credit card. Always, I suggest all the doctors should have a credit card. Please use credit card, but please ensure that you pay the credit card bill at the right time. There should not be any delay. Then because the interest rates are very high, always use credit card for all your transactions. Okay. NPS or UPS, I believe United, which one would you advise? I won't advise for your pension. I advise NPS. Otherwise, I want you invest as an investment to get an excess 50% tax benefit, I won't suggest you to use NPS or ULIP. You always go for the new tax regime and invest in equity. That will be my yes. Suggest a few credit cards. Should we change NBS funds? Any okay, and the Shiju and those who have replied or also want to have any suggestions? Yes. Take home message, continue SIPs. Raju, my good friend, please continue SIP. Please continue. Step up 10%. Yes. Please suggest some good mutual fund invest. Which one is the best broker? Okay, please avoid a broker. Please avoid a broker. And I will suggest you some mutual fund. Small case good for basket funds. There's very good small case is very good. And yes, then please suggest mutual fund. Okay, from the large cap space, I suggest like something like I suggest you can use HDFC equity. That is now called the HDFC flexi cap fund. You can use the Nippon large cap fund. You can use that. Mid cap, I suggest either you can go for a Motilal Oswal. Small cap, I suggest Quant small cap fund and also the Nippon India small cap fund. So these are the fund suggestions for me in March 2000. Can we do SIP in ICC direct DMAT? Yes, ICC direct DMAT, but the ICC will charge you as a broker. It will not be direct, it will be regular. Okay. So only the zero brokerage firms like Zerodha, Grow, the Upstock, Angel One, they are giving you a direct mutual fund. Otherwise, but it is not this one. There was a question regarding as a government employee, can you invest in crypto? Crypto is legal now in India. We can use that, but I am not never invest in like speculative investments like futures and options. So that is against for the government employees. But you can always invest in crypto because that's legal now in India. Any point in increase the amount in GPF because the GPF returns will be low. Okay, I agree that it is a debt. It's a good way of increasing your debt investment, but I won't suggest you to increase your amount in GPF. But you channel that money to a mutual fund rather than in. Imagine one ULIP got matured and we got a bulk amount. And how to invest in mutual fund? Yes, as a bulk. Raju, please invest as a bulk investment now. Please message me directly. You have my number. I will suggest you to. I will give the mutual fund houses. Yes. SBI credit card platinum. If you yes. Any other questions? Any questions, Vipin, or shall we wind up? All people are leaving now because they get bored. Yes.
Oh, you can. I was muted.
Okay.
This was a very useful session, and you told everything about the basics. And maybe we may need one more session from your side regarding. We'll get feedback from the members and inform you later. Maybe after one.
Sure. There is no need for any talk. Okay, we can have a pure interactive session.
Even if we ask for questions, it's very few respond. That's the only issue we are facing. And you have seen the response we got it from the Google spreadsheet. Anyway, it was very useful for the members, whether it be senior or junior. We'll have more sessions like this.
Cecil,
Yes. Yes.
You're a doctor or a professional?
He said a doctor.
I am a head and neck
oncologist at RCC.
Head and neck radiation oncologist. I am taking care of radiotherapy and chemotherapy for head and neck cancers for the last 20 years.
From where you're working?
RCC.
Okay.
At Regional Cancer Center, Trivandrum.
Fine. Just tell our clients that don't do speculations.
Yeah.
Yeah, that's a very important thing. Only investing, that's the best option.
Yeah. Yes.
And please refrain from this day trading and also futures, because we are not professionals, and we are not watching it every time.
Yes,
No,
that's a very good message, sir, because please avoid trading.
Yeah.
No one has become rich by trading. Always be an investor. You invest for
That's
long.
it. Yeah, I think that's also should be in the take home message.
Yes, you are absolutely right.
I am into this stock market from my pre-degree onwards.
Oh, great. Yeah.
But I was doing day trading also. The amount which I got from investing will be put in day trading, and that's everything will be lost. For the last 10 years, I am doing only investing. Thank you very much.
Thank you very much.
Dr. Abhilash, please propose a word of thanks. Dr. Abhilash.
Hello.
Okay.
Hello. Good evening. നല്ലൊരു ക്ലാസ് ആയിരുന്നു. ഡോക്ടർ സെസൽ എന്റെ സീനിയർ ആയിരുന്നു കോട്ടയം മെഡിക്കൽ കോളേജില്. ഞാൻ 95 ബാച്ച് ആണ്.
Yes.
ഓക്കെ, ഏതായാലും ഒരു ഇൻട്രൊഡക്ഷൻ ആയിരുന്നു. ഒട്ടും അറിയാത്തവർക്ക് കുറച്ചുകൂടെ ഒരു ക്ലാസ്, ഒരു ഡെമോയൊക്കെ വേണ്ടി വരുമായിരിക്കും. ഓരോ ആപ്സ് വഴി ഏതായാലും ഈ പറഞ്ഞ കാര്യങ്ങളൊക്കെ വളരെയധികം ആൾക്കാർക്ക് ബാധകമാണ്. ഇതിന് സേവിങ്സ് ബാങ്ക് അക്കൗണ്ടിൽ വെറുതെ പൈസ ഇട്ടുകൊണ്ടിരിക്കുക എന്നുള്ള പരിപാടിയായിരിക്കും കൂടുതൽ ആൾക്കാരും ചെയ്യുന്നതെന്ന് തോന്നുന്നു. ഏതായാലും ഒരു ഐ ഓപ്പണർ ആണ്. നമ്മൾ ഇൻഫ്ലേഷൻ എങ്ങനെ ബീറ്റ് ചെയ്യും, കോർപ്പസ് എങ്ങനെ ഉണ്ടാക്കും, മാർക്കറ്റിന്റെ ഫ്ലക്ച്വേഷൻ എങ്ങനെ നമ്മൾ മാനേജ് ചെയ്യും, പ്രത്യേകിച്ച് ഇപ്പോഴത്തെ സാഹചര്യം. നമുക്ക് തുടർന്നുള്ള സെഷനുകളും എനിക്കൊന്ന് ഇന്ററാക്റ്റീവ് സെഷൻസ് കുറച്ച് ആൾക്കാർ നമ്മുടെ ഇടയിൽ ഇൻട്രസ്റ്റ് ഉള്ളവർ കാണുമായിരിക്കും. അവര് തന്നെ കുറെ റിപ്ലൈ ഒക്കെ കൊടുക്കുന്നുണ്ടായിരുന്നു. അപ്പം നമുക്ക് തീർച്ചയായിട്ടും കണ്ടിന്യൂഡ് സെഷൻസ് ഉണ്ട്. തീർച്ചയായിട്ടും അങ്ങനെ ഇൻട്രസ്റ്റ് ഉള്ള ഡോക്ടർമാര് വരും. ആൾക്കാർ എനിക്കൊന്ന് കുറച്ചൊക്കെ എക്സ്പെരിമെന്റ് ചെയ്യായിരിക്കും നമ്മുടെ ഈ ക്ലാസ്സിന് ശേഷം. അപ്പൊ തീർച്ചയായിട്ടും അവർക്ക് ഡൗട്ട്സും കാര്യങ്ങളും ഒക്കെ വരും. ഇപ്പൊ നമുക്ക് ഡോക്ടർ സെസിൽ പറഞ്ഞ ഒരു ഇന്ററാക്റ്റീവ് സെഷൻ തന്നെ വെക്കാമായിരിക്കും തോന്നുന്നു. ഞാൻ നമ്മുടെ KGMOയുടെ പേരിലും നമ്മുടെ അക്കാഡമിക് സെല്ലിന്റെ പേരിലും ഡോക്ടർ സെസലിന് നന്ദി പറഞ്ഞുകൊള്ളുന്നു. വളരെ തിരക്കേറിയ ജീവിതത്തിൽ RCC ആണ്, നമുക്കറിയാം. കുറച്ച് സമയം തീർച്ചയായിട്ടും നമുക്ക് വേണ്ടി ചെലവഴിക്കാൻ കാണിച്ചതിൽ ഞാൻ നന്ദി പറഞ്ഞുകൊള്ളുന്നു. ബാക്കി നമ്മുടെ സുരേഷ് സാറിനും നമ്മുടെ ഡോക്ടർ ശ്രീകാന്തിനും ഡോക്ടർ ബിജോയ്ക്കും ഡോക്ടർ ജോബിനും എല്ലാം നമ്മുടെ അക്കാഡമിക് സെല്ലിന്റെ പേരിൽ ഞാൻ നന്ദി രേഖപ്പെടുത്തിക്കൊള്ളുന്നു.
Thank you everyone. Thank you, Cecil. And
thank you, Vipin.
Okay. I'll be contacting you after getting feedback from the members. Anyway, this is a very useful session, and as you can see from the chat box, everyone is mentioning regarding how useful it was. Very useful session. Thanks a lot. It was really useful for beginners like me. Excellent class. Expecting a continued session. That was and more sessions, please. Expecting a follow-up session. Of course, we will be arranging a follow-up session, maybe 1 or 2 as per Dr. Cecil's convenience. Thank you, Dr. Cecil, and thank you everyone. Good night.